Welcome to the Nebraska Soybean Board Weekend Market Roundup. I'm Chad Moyer, filling in for Susan Littlefield here today. We're going to be joined by Kyle Bumsted with Allendale here in just a moment. Talk a little bit about how we ended out the markets here this week. Interesting, not only for corn and soybeans, but also on the livestock side. So we'll get to that in just a moment.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Today on the Nebraska Soybean Board Weekend Market Roundup, we're joined by Kyle Bumsted. He is with Allendale. Kyle, thanks for joining us here today. I guess just after the week's trade here, we've had a lot of volatility once again, up and down in a number of different commodities. Just give us your thoughts on the market trade overall this week.
It's been a crazy week here, both ups and downs. The ups in the grain complex, and then down here on Friday, and the consistent down here in the livestock complex. So it's, like you said, been a very volatile week. We've been looking at headlines here coming out of the Middle East region as well, and how's that affecting petroleum, as well as our macro market picture as well, too. We've had some Fed speakers, interest rates. Are they going to raise them? Are we going to stay the same? We're kind of getting mixed readings here out of the Fed with on both sides of it. So that's kind of been the driver behind most of the trade this week has been a macro picture.
Yep. All right. Let's talk about some of the commodities individually. And first of all, on that corn, it was we had a goal. We were going to try and get through that $5 mark, and we did at one point. Problem is, we couldn't stick it, could we?
That's right. We couldn't stick it above $5 here, especially here on Friday. You wanted to see it go home. Wanted to see us go home above 506, 505 and a half, 506 area. Get above that old resistance over there on the chart, but just couldn't quite do it here. The $5 mark here yesterday on Thursday of the week was a tough mark. It was a tough number to get through, and once we did, there wasn't a lot of sell orders up there, which allowed the market to float higher. Now, the volume and open interest on Thursday when that happened. Notice on the chart there, the big green bar there on that Thursday, there was big volume and big open interest, a big increase in open interest. So new money was flowing into the corn complex. It's going to be very interesting to see how things settle out here once we, get the numbers here from Friday's trade session and see what happened here. Did they take some money off the table? Was it stops? What was it here? What kind of action did we have?
Yeah. Kyle, why is that significant? Why had we gone so far without that combination, and then all of a sudden, one day we get it? What's going on, do you think?
That's a good question. There's been some behind-the-scenes things happening here the last few days. National cash basis has slightly improved week over week, albeit about a penny from my calculations so far here. I haven't seen the calculations here at the end of the day. But the December to March corn spread, the forward spread, took some carry out of the market. So it told me that there were some commercials that were trying to get some bushels sourced here as farmers lock up their crop in the bin here on the farm, put it in on-farm storage. They're not selling a lot of grain right now. So they're trying to get some, the commercials are trying to get some coverage here is what they're doing. And I think that's what kind of drove the spreads here a little bit. There's been some massive volume in the spreads the last couple nights. On the overnight sessions especially, we've seen big volume in that Dec to March corn spread.
All right. Give us just I guess, kind of the basics on spreads. What are you watching, and why is that, or why should that be important to the farmer? You know what I mean?
Yeah. Well, that's a very good question. As I watch those spreads, that tells me as a farmer, should I sell it? Should I store it? What should I do? Should I re-own it? Or should I be locking it up in a bin, trying to capture the carry out there by doing something with futures and options or, forward price contract, something like that? So when I look at that, as I look at those numbers here, I'm looking clear out to potentially July. A lot of corn gets stored out to July, but right now it's, what do we do with our December hedges? Dec to March, do we roll out our hedge? As that carry has shrunk, it's less incentive to roll your hedge out to March and lock up that premium, lock up the carry of the market. So what you see is, a lot of folks will just sell it off the combine and say, hey, they want it right now. Maybe I'll go out there and re-own it with some, some options or something like that. So that's what I'm looking at is what is the market paying me to store my grain with interest costs the way they are in the operations and whatnot. does it really, make sense for my operation to store grain, or should I sell it, stop the interest and look at something else?
Yep. I heard you earlier in the week talk a little bit about basis, and maybe we can talk a moment about that because as we've lost some of those quick ship bids, that basis is still a story, though, even as harvest is going on, right?
Yes, it is. And like I said, folks are locking the crop up in the bin right now. They're not hauling much to town, or whatever they can haul to town is just getting kind of hand to mouth, or just kind of trickle selling it, if you will. So the end users are having to incentivize the producer to, maybe part with some bushels here by pushing that basis a little bit. And we still have a decent sized crop out there. Don't get me wrong. So I don't want this taken the wrong way, but there's certain areas out there in certain regions. You're seeing regional basis just get pushed pretty hard here, especially in some of the areas here, the Western Corn Belt, where the crop isn't near as good. The end users are having to go to the cash market and say, hey, we're going to bid up and buy some corn here. We need to get some coverage, especially in feed yard country.
All right. Let's switch gears, talk about the soybean complex here a little bit. Again, volatility, definitely noticed that in soybean oil this week. And I guess you could say really all three segments of the soybean complex had volatility. What's going on with beans in your mind?
That's correct. Well, it looked to me the last couple of days here, towards the end of the week, it looked like there was a big push for soybean meal. We saw December bean meal go off near its highs around that 423 to 425 area here on Friday, and it told me, with the way that the commercials were buying that December contract and selling the deferreds, and not necessarily buying up near as much as the deferred, somebody needs to get some coverage on here as far as this meal market. And I think that's kind of relating out of South America. We've been hearing headlines about weather down there and how dry it is on some of their shipping rivers and ports as well. Like we do here in the United States, we're having an issue on the Mississippi River and getting our grain out. They're having some issues down there as far as getting their grain out. So one of the markets that I kind of watch there to see if there's a weather issue is the coffee market. And albeit coffee is not something that's normally talked about here on the weekend roundup, it is one of those that I kind of keep an eye on here as it is a popular market. It's a weather derivative, I guess. All these markets are weather derivatives, and coffee has had some massive up moves here this past week, and that tells me that somebody's a little bit concerned about the weather down in South America, and I think that could have trickled over into the soybean complex as well as maybe dribbled into the corn complex as well, Chad.
Okay. Yeah, like you said, watching those shipping patterns. Are we moving grain down the Mississippi? I hear there's some interest in getting grain out to the Pacific Northwest as well. So that continues to be a story and kind of connects back to that basis discussion that we were having, right?
Yeah, that's correct. And as you mentioned, quick ship bids and losing those. I mean, if you've got a unit train pulling in there and you need to get that thing back out on the main line in 24 hours, you may incentivize some producers to get some bushels in there by pushing that basis, giving them a few cents to get some grain in there. So, looking here at the soybean chart, it would have been nice to see this January close above that 1330, 1335 mark. Especially 1335, that would have been really good to see us close above. But we're still kind of in an uptrend here. It looks good on the daily chart. For the week, we're up a couple of cents here on corn, and we're up 20.25 cents on beans. So we still are in an intermediate uptrend here on this soybean complex.
All right. Very good, Kyle. Let's switch our attention over to the livestock and cattle, a story this week as well. Boy, what do you make of that? Thursday, Friday, tough on cattle, but we came out of the week with slightly higher cash markets. What do you make of that?
That's right. We did come out of the week with slightly higher cash markets, and I kind of had a feeling going into the week we'd see a slightly higher cash market. I just didn't anticipate the live cattle taking the setback that they did. Albeit fats were down like I think $2.20 here for the week. We did hold last week's lows here. We did that 184.25. We did hold last week's lows. Should we violate that? I think there's a quick move down to 182, maybe on down to 180. If we violate 180 in that December contract, then it's going to look really ugly here as far as the chart standpoint. But the market that I'm really concerned with is the feeder cattle market. Albeit we have a cattle on feed report here today, or on Friday here. This feeder cattle chart looks ugly to me. January feeders down $9.20 here for the week. So that's coming off the heels of a weaker cash market out there in the country. We saw some really weak sales here midweek here down the southern plains here. Some of those feeder index cattle were bringing in the 230s, and you're sitting here with the board that was sitting around 245. The index right now is sitting around that 244 area. And there's just simply too much premium out there in those deferred contracts, given where the cash market's at. Now, October feeder cattle, they go off this coming week, so we've got that to deal with, as well as October live cattle. Those are going to be coming off here in short order as well. So the shot clock's really winding down. So the emphasis is out there on that January contract and the feeders. So I do think that we do have a shot at higher prices here after the first of the year, but it's not the time of year I want to have a lot of exposure out there with the unknowns out there in the world and things like that. As far as option volatility is very cheap right now for both puts and calls in the live cattle side and feeder cattle side of things. So that might be the least amount of risk to put on the table is by buying an option in one of those directions, whether you're bullish or bearish.
Yep. All right. So again, we've talked about a lot of different things here on the Market Roundup. I guess just looking ahead to next week now, we've got one more, a full week of trade here in October. What are you watching going into next week? What are the keys for trade for the rest of harvest, would you say?
I'd say the keys for trade for the rest of harvest, we need to, figure out where October, the December contract and November contract, as far as soybeans go, December corn, November beans, where are those going to settle out here in relation to the federal crop insurance price? We're in price discovery mode right there. So there's going to be some chatter about that here in the next 6-7 days. And on the live cattle and feeder cattle side of things here, the live cattle, I'm starting to, get a little bit concerned. I'd like to see some more holiday type demand pick up here. We're getting on the precipice of coming into that holiday season here, where you're going to see some end users, restaurants, and retailers start to pick up box beef here as far as holiday parties and whatnot. So I would like to see some of that, and I think that could help buoy this cattle market here if we do get a box that holds at 300 and we start working higher from here.
All right. Very good. Just as we wrap up, give us your contact information for folks that would like to chat with you.
You can call me at the office here at 308-708-7340.
Good to talk to you, Kyle. Thanks for being on with us today, okay?
You, Chad.
Again, that's Kyle Bumsted. He's with Allendale. He joins us on this week's Nebraska Soybean Board Weekend Market Roundup. It's brought to you by Nebraska soybean farmers and their checkoff. I'm Chad Moyer reporting.